President Trump is tweeting about OPEC. I never thought I'd see the day. Does he want higher oil prices or lower oil prices?
We'll bring in the Canadian strategist to start talking about that. But we also follow U.S. strategy as well. Good morning, Bloomberg. I think that investors are kind of forgetting the law of diminishing returns with respect to President Trump's tweets, right? If you remember about a year ago, we were reacting a lot more when the president would tweet. Now it's, I think that the noise factor is beginning to dissipate, believe it or not. Mm-hmm. We love to talk about it when it comes out and everything. But I think the more important thing is that from a year-to-date perspective, but really over the last 12 to 18 months, things like energy have been underperforming.
Yeah.
Have been underperforming greatly. We write about it in our piece that we put out last night that we're not seeing the typical and historical late cycle sectors outperform, period. We find this infatuation almost, Alix, with a lot of our competitors and compatriots, let's call them, trying to still diagnose the end of the bull market, still scare investors that a recession's around the corner. And we're not seeing the internal parts of the market back that up. We're not seeing Fed policy back that up. But specifically with respect to energy, which was your question, we've had a nice move short term. And remember, too, that there's been so much momentum building in energy. Let's get energy stocks going. Let's get energy stocks going. This may be an opportunity on a short-term basis for some short-term traders to potentially take some profits.
So basically, we saw the late cycle. In theory, it would mean a rotation into value. In theory, that would mean you'd sell certain tech stocks that have outperformed, that are growthy, and go to the cyclical names and the value names like an energy play. Is it that the issue, or is it the fact that investors have such negative sentiment towards energy stocks because they don't believe in a $70 sustainable oil price? It's
a great question. When we take a look at how and what is making up the the value component of the market, it's not really energy stocks, right? Because energy stocks are typical and traditional cyclical stocks, right? So the higher the PE, actually, the better, because you want to grow into the PE. Right? You follow me? So the value part of energy, Alix, are things like Exxon, Chevron, those types of names, Suncor in Canada, TRAP, as we call it, TransCanada and Enbridge, because of the dividends and more importantly, the cash flow. The drillers are in the refiners and things like that are more the go growth. The drillers, the offshore places especially, have suffered the most because they need to see higher oil prices to do very well. So the value part of the market from our perspective are still financials. And actually, tech is starting to show some very strong value disciplines with respect to that. So in terms of a late cycle move, you want to see some of these commodity areas really start running, and haven't seen that yet.